Okay, so the functions within the cycle, you have your human resources, timekeeping, payroll preparation, payment preparation and payout, and your deductions. Not every organization, depending on the size and the nature, like I've said before, not every organization are going to have the cycle broken up into these specific departments, if I can call it that. Okay, but most organizations will have an HR and a payroll department. Okay, some of them may just have HR and payroll together. Okay, but the larger organizations usually split HR from the payroll side as well. Okay, in terms of the functions within the cycle, your HR is your entry point into the cycle. Okay, so in terms of initiation, that is then the first cycle where the employees, the costs associated with the employees, that is then the first department or sub-function of the cycle that is entered into. Okay, so your HR would then deal with everything from advertising a specific position, interviewing, the hiring of the employee, the termination of the employee, should that be applicable, getting all of the documentation for the employee. So that is the HR department's responsibility. Okay, and then I'm just going to talk about all the others: timekeeping, payroll prep, payment prep, and payout and deductions as the payroll sub-function, okay, of the cycle. Okay, so in the payroll side, whereas the HR focuses on the documentation, if I can put it that way, with respect to the employee. Okay, the payroll side then focuses on all of the costing and calculations relating to this employee. Okay, so from your timekeeping, the record keeping side, yes, I think that would be a better word as well. The record keeping side, from keeping record of the clocking in of the employee to the clocking out, signing off or approval of any overtime that is requested, the authorizing the total time worked for a specific month or whatever the case may be, up to getting the payroll packet ready, the pay slips, the generation of those pay slips, the actual payout either through an EFT or the physical handing over of cash, and then the deduction side as well, whether this employee belongs to a medical aid or the company's pension fund, or the one that is statutory required would then be the pay as you earn, the payee deduction every month, provided the employee is over the annual tax threshold of 50,000 currently in Namibia. Okay, then tax needs to be deducted off their salary, and that needs to be paid over monthly in the form of pay as you earn to the receiver of revenue. Okay, so when you are thinking about these cycles or the sub-functions in the cycle, you need to ask yourself, what is happening? What are the activities in the cycle? What are the risks associated with those specific activities? And then if you put on your management hat and you ask yourself, if I were in charge of this function or in charge of this department, okay, and I'm faced with these risks, what are the controls that I would have implemented to address these risks? Okay, remember when you're thinking about a business or when you're putting your management hat on, just remember there are business risks as well. Okay, for example, hiring an employee who is not qualified for the position in which they are sitting currently. Okay, that is a business risk because you are dealing with that could lead to various other various other problems, okay, or challenges, because the employee could range from errors to bad or poor customer service to reputational damage, all of these types of things. But that is a business risk. Okay, so when you put on your management hat, you need to think about addressing the business risks as well. Okay, but when we come from an audit perspective, okay, if you're putting on your auditor's hat now, not all of the risks and the controls associated with those risks are important for the audit purposes. Okay, so for the audit purposes, we are thinking about audit risks, i.e. what could go wrong with the statement of financial position, the statement of comprehensive income, statement of cash flows, and the statement of changes in equity, i.e. the financial statements and any related disclosable items. Okay, so remember the auditor gives an opinion on the financial statements. Okay, so that is what we are interested in, and that is what the auditor will then focus his audit procedures on. Okay, so this was a common mistake when I was marking your test one. These types of business risks that are being highlighted constantly by a number of students. Okay, remember, if it does not have an impact on a specific line item, on the statement of financial position, statement of comprehensive income, or any of the other financial statements, any of the other components of the financial statements, then it would not necessarily be of any importance to the auditor. Okay, so just be mindful of that as well. All right, so for example, when we are starting with the HR department, okay, the advertising would not necessarily be of audit importance. Okay, the employment contract, on the other hand, would be important for the auditor's purposes, because it would stipulate a whole range of conditions which may give rise to costs sitting on the statement of comprehensive income, or some sort of payable, or any other account with a balance sitting on the statement of financial position. Okay, in terms of your timekeeping and the payroll, the rest of the payroll function, okay, you would need to think about what would have an impact on my annual financial statements. Okay, so the accuracy, the completeness, the classification of accounts, okay, the validity of the hours, for example, that are worked, especially considering overtime. Some companies have a clause in their contracts of employment that only overtime which is pre-authorized is valid overtime. Okay, so you need to think about the specific, if it is a control, the control objectives, or if you're trying to do some substantive procedures, okay, you need to think about the applicable assertion. Okay, so let's just take accuracy for argument's sake. If the company employs a method of clocking in, then thinking about the controls in terms of the accuracy of hours worked, you need to then, if the company has these controls in place, hopefully they should then, to ensure accuracy, but these controls would be of importance to the auditor. That would be things like the fact that there is a clocking card system in place, whether it's with a card or whether they employ some sort of biometrical procedures where the employees need to scan in with their fingerprint or their eye, I don't know what you call it, eye print, or yeah, eye recognition, we can call it that, to the fact that the employees, the clocking in wherever they enter, that point of entry, okay, that needs to be monitored, because it could be that one employee clocks in for another employee, if it is possible, if they are using the clocking cards. Okay, so that is monitored either by, usually there's a security guard sitting there, or there is a CCTV camera that is positioned over that entry point, just anything that would monitor the accuracy and the validity of the hours that are being claimed. Okay, payroll prep, payment payout, that involves setting up reconciling the number of hours that were worked for the month if the person earns an hourly wage. Those are some of the standard controls that will need to be implemented. If there's overtime that's being claimed, that needs to be authorized by a specific, the supervisor of the specific employee, things like that. Okay, and then that payout needs to then be agreed to whatever supporting documentation that is applicable there, i.e. the overtime authorization form, or an extract of the employee's contract or wage rate, where just salary increase letter or something along those lines as well. And then that needs to be agreed to the actual pay slip, which is presented to the employee. Okay. And then when the payout happens, if this is now a wage earner, then the release of the cash is a very important aspect of this cycle, because employees need to sign for the cash that is received. Otherwise, they could very well come back and say that they never received their wages for the month. Okay, that we refer to as unclaimed wages at the end of the month. Okay, so, and then also one employee could sign for another employee. Okay, and then that needs to be strictly controlled, for example, with some sort of a proxy form to say, I give you permission to collect the wages on my behalf, if I am the employee that cannot make the payout date or something along those lines. Okay, and then all of the deductions that obviously needs to be in terms of the employment contract, whether there's medical aid or pension or something like that. And then obviously we said the one that would be most likely to be applicable would be then the pay as you earn that is deducted. Okay,